Hello everyone, a very happy new year 2026 to all our viewers. As we step into the brand new year, let's also step into financial awareness and responsible tax practices. Paying the right tax, filing return on time, and understanding our income correctly is not just a legal duty, it's a contribution towards building a strong nation. Welcome back to Tax Talk by TNC Sridhar. In today's episode, we are going to discuss the topic that affects almost every working professional, salary and perquisites. Many of us look only at our take-home pay, but taxation works very differently. So before the new financial year decisions begin, let's clearly understand how your salary and benefits are actually taxed. Let's get started. If you're a salaried employee, this episode is extremely important for you. Many people believe tax is calculated only on the basic salary, but in reality, your benefits, allowances, and perks also matter a lot. Today's episode, number 9, we are going to clearly understand what is salary for income tax, what are perquisites, which perks are taxable, which are not, and how you can plan better to reduce legally your tax liability. Let's begin. What is salary under the Income Tax Act? As per the Income Tax Act, salary is not just your monthly pay. It includes your basic salary, dearness allowance, house rent allowance, bonuses, commission, leave encashment, employer's contribution to provident fund, and even some benefits provided by the employers. Salary slip shows many components. Tax is calculated on the total of all, not only the basic pay. In other words, what we call it as a cost to company, that becomes a very relevant factor in defining a salary for income tax purpose. Now, there are 4 important ingredients of a salary. Number 1 is there is an employer, and number 2 is the employee, and the services rendered by the employee towards the employer, for which there is a compensation from the employer to the employee for the services rendered both in cash and in kind, directly or indirectly. In other words, there has to be a nexus of employer-employee relation, and there has to be a service in relation to that employment towards the employer, for which the compensation has to flow from employer to the employee. Now, when we talk about allowances, taxable versus exempt, let's talk about allowances, which many employees get confused about. Some allowances are fully taxable, like dearness allowance, city compensatory allowance, and some allowances are partly exempt, like house rent allowance, leave travel allowance. For example, if you are paying a rent and receiving HRA, you can claim exemption, but only if proper conditions are met. An important reminder, if you don't submit the rent receipt, travel proof, the entire allowances can become taxable. Now, what are the perquisites? Let's understand one of the most ignored yet most important concept of salary taxation, the perquisites. In simple words, perquisites are additional benefits or facilities provided by your employer over and above your regular salary or wages. These benefits may not always come in cash, but they have a monetary value, and that value is treated as income under the Income Tax Act. That's why even if you don't receive the money directly in your bank account, the tax can still apply. Just to explain what is dearness allowance. Dearness allowance is the compensation for the value of money that is getting depreciation in relation to your inflation that is taking place. That is not in your hands. But because the value of money goes down, it gets compensated by dearness allowance. And you call it city compensatory allowance. City compensatory allowance is based on in which city you are stationed. The cities are classified broadly into A class, B class and C class cities. So if you are in a city, A class city where cost of living is very high, you are required to spend more money in living there. So to compensate that, city compensatory allowance is given to you. If you are going in a smaller city, then the city compensatory allowance will be less because there the cost of living is less. These are the things that happen. And house rent allowance. Naturally, when you are going to work in a place which apart from your regular place of stay, when you are going for an employment at some particular place, then you will have to stay there. So that's why you are incurring on some rentals. So the company employer takes care of that part to give you an allowance so that you are able to stay near the place of work and that your efficiency in the work increases. So that is the reason for house rent allowance. But because you are going to live there near that, so it will not be fair on the part of the government to charge the entire thing. That is why some part of it gets exempt as per the rules of it. Then there are other allowances. For example, suppose you are going to perform a duty to another city. On duty you are going somewhere. You are not going on your own, you are going on duty. So whatever allowances that is paid to you for performing your duty, whatever you are doing, those allowances does not get taxed. We will look at it a little later on these aspects. Let's see some common type of perquisites. Company car. If your employer provides you a car used only for official purposes, generally not taxable with proper record. Used for personal or mixed purposes, taxable perquisite. The taxable value depends upon the engine capacity, driver facility and usage. A free or concessional accommodation. If your employer gives you a rent-free house or accommodation at low rent, the difference between market rent and what you actually pay is treated as taxable. This is very common for senior executives and government employees. Employer paying the personal bills. If your employer pays bills such as electricity, gas, mobile phone, school fees, household, etc., these are directly personal benefits and their value becomes fully taxable perquisites in your hand. However, if there is an element which is used for official purposes and personal purposes, to the extent of which is used for official purposes can be exempted, but not which is for the personal purposes. Then coming to the interest-free or concessional loans. If you are receiving a loan from your employer at 0% interest or a lower rate of interest than the market rate, the difference in interest can be treated as a taxable perquisite. However, loans for medical emergencies and small loans up to 20,000 are exempt. Free food, gifts, gadgets, free meal provided during working hours may be partially exempt because the employer might think that if you are going out to have food or something like that, you will not be available for the employment. But if it is provided at a workplace and you are able to take the food and immediately get to work, it improves your efficiency. Keeping that in view, to that extent, it will get exempt. Gifts or vouchers exceeding rupees 5,000 per year are taxable. Laptops, mobile gadgets provided for official work usually are not taxable, but personal use may attract tax. The important points to remember: many employees assume these benefits are free, but for the income tax department perspective, they are a form of income. That is why Perquisites are added to your total salary, reflected in Form 16, reported by the employer to the tax department. Ignoring them can lead to tax mismatch, additional tax, interest, or notice. Simple takeaway for viewers: if your employer is giving you anything of value, always ask, is it taxable? Is it shown in Form 16? Understanding perquisite helps you to plan tax better and avoid surprises later. Salary structuring and tax planning tips. Here are a few simple but powerful tips. Understand your salary structure before accepting an offer. Submit investment proof on time. Keep record of rent receipts and travel bills. Check perquisites shown in Form 16. Compare old tax regime and new tax regime before filing the return. Remember, smart planning can save tax, but hiding income can create problems later. The common mistake the salaried people do: ignore perquisites, not checking Form 16 properly, assuming employer who has calculated tax correctly, not consulting before choosing tax regime. A small mistake can lead to notice from the income tax department. To summarize, a salary is not just what you see in your bank account. The allowances and perquisites play a big role in taxation. Understanding them clearly helps you to avoid penalties, plan better, save tax legally. In our next episode, we'll talk about the topic that many people believe is 100% tax free. That's agriculture income. But is agriculture income always exempt? What if you have both salary and agriculture income? And what are the conditions you must follow? Like, share, and subscribe to Tax Talk by TNC Sridhar for simple and practical tax guide. See you next Thursday at 12:30 p.m. Until then, stay aware, stay tax smart.